Ladies and gentlemen, good day and welcome to Fineotex Chemicals Limited Q4 FY24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Aarti Jhunjhunwala, Executive Director from Fineotex Chemicals Limited. Thank you, and over to you, ma'am.
Thank you so much. Good evening, everyone. We are delighted to welcome you to the Q4 and FY 2024 earnings conference call of Fineotex Chemicals Limited. The financial statements and presentation have been uploaded on the stock exchange and our website for your thorough review. As we conclude FY24, I am pleased to reflect on the significant progress we have made despite the challenging macroeconomic landscape. Our focus on developing high-performance chemicals has been crucial in the driving force and sustainability, reinforcing our position as one of the market leaders in the chemical industry. Fineotex continues to be at the forefront of India's specialty chemical sector, recognized both domestically and internationally in the textile market. Our dedication to market expansion drives us to continuously introduce new products, explore untapped territories, and provide value-added services, including advanced technical solutions. Our strategic initiatives throughout FY24 have not only promoted growth but have also reaffirmed our status as one of the industry leaders. During this fiscal year, we successfully commissioned a solar power plant of 100 kilowatt peak at our Ambernath facility. This initiative enhances our long-term energy reliability and underscores our commitment to environmental stewardship by significantly reducing carbon emissions. This approach aligns us with our dedication to ethical practices and strengthens our competitive edge in the industry. Furthermore, the global easing of chemical prices has provided us with the opportunity to expand our EBITDA margins. Leveraging this favorable market condition and a higher volume of operations, we have achieved our best ever EBITDA margin this year. To meet the evolving needs of our customers, we acquired an additional 7 acres of factory land at additional Ambernath, MIDC, Thane, Maharashtra, with an investment of rupees 35 crores funded by internal accruals. I am pleased to inform you that the site work has already begun. This is the new facility located near our existing Ambernath plant, and it will cater to the growing demands in our specialty performance chemical product lines, namely textile, home care, cleaning, hygiene, and drilling specialty chemicals. This strategic investment enhances our production capacity, enabling us to capitalize on future growth opportunities and respond swiftly to the changing market dimensions. We are also proud to receive the prestigious ESG badge from Dun & Bradstreet. This recognition highlights our proactive initiative and ongoing dedication to environmental, social, and governance considerations, reflecting our commitment to sustainability. This year marks our second consecutive recognition as a great place to work. This accolade is a testament to our unwavering commitment to fostering a workplace culture built on trust, transparency, and collaboration. We express our sincere gratitude for the continuous support and active participation of our stakeholders as we collectively work towards a brighter and a more sustainable future together. I would now request Arindamji to provide his insights into our operations.
Thank you, Aarti, and warm welcome to all. As FY24 draws to close, I would like to reflect on Fineotex Chemicals' significant achievements and strategic advancement this year. Our company, initially focused on specialty chemicals for the textile industry, has successfully diversified into sectors such as health and hygiene, oil and gas, and prioritizing high-end customized solutions for our clients. This approach has strengthened customer trust in our products and enhanced our brand equity. Our commitment to research and development has been pivotal. We have focused on eco-friendly and sustainable products manufactured at our overseas facilities, driving expansion into key international textile hubs in last 3 years. Strategic exploration in emerging high-growth products, particularly in hygiene and drilling specialties, has positioned us to engage effectively with India's leading detergent manufacturer and premier oil and gas companies. Our dedication to quality and regularity standards was further validated by accreditation from NABL, India's premier accreditation body for laboratory assessment and pharmaceutical FDA approval. Reflecting on the year, I am pleased to report that ICRA upgraded our ratings, reflecting our financial strength and robust performance. These achievements affirm our strategic direction and commitment to delivering value and driving sustainable growth. Now I request Sanjay ji to present our quarterly and full year financial performance and other recent strategic developments. Thank you.
Thank you, Arindam ji, and good evening, everyone. I am pleased to present the financial highlights for Quarter 4 and financial year 24. During Quarter 4, our operations revenue was 1,530 million, with significant growth attributed to increased sales volume across all key segments and strong customer demand. Our EBITDA rose to 383 million, marking a 17.1% year-on-year increase, with margins reaching 25%. Meanwhile, our profit after tax reached 305 million, reflecting a 17.2% YOY growth with margins at 19.9%. Moving forward to financial year 24, our operational revenue escalated to 5,690 million, showing an impressive increase. Our EBITDA surged to 1,484 million, marking an impressive 31.8% YOY growth, with margins at 26.1%. We recorded our historic highest PAT till now, which is 1,210 million, up by 35.1% YOY basis, with PAT margins at 21.3%. Our return on capital employed and return on equity were 34.3% and 29.9% respectively, highlighting effective capital utilization and operational efficiency. In line with our commitment to enhancing shareholders' value, we are pleased to announce a final dividend subject to members' approval at the ensuing AGM, amounting to 0.40 paisa per equity share. This, coupled with the interim dividend paid during financial year 23-24, brings the total dividend to 1.60 rupee per share for the fiscal year, underlining our dedication to rewarding shareholders. In conclusion, our strong financial performance in financial year 24 positions us well for the sustained growth and value creation for our shareholders. With this, we close our opening remarks and we'll open the call for a quick interactive question and answer session. Over to you, Zico.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 1 or 2 per participant. Should you have a follow-up question, we would request you to rejoin the queue. We will wait for a moment while the question queue assembles. The first question is from the line of Anupam Agarwal from Lucky Investments. Please go ahead.
Yeah, hi Sanjay and team. Good afternoon and congratulations on good numbers. My first question is if you could break up the volume for the quarter and for the year between the textile and the FMCG business.
Thank you, Anupamji. Yes, there has been a remarkable growth in the quarter four volumes for textiles. As we speak, in the quarter four, the volume growth, the volume contribution by textile and health and hygiene for quarter four is almost equal right now. Whereas if I talk about the entire year, it's, let's say it's 45% is textiles and 55% is cleaning and hygiene specialties.
Understood. That helps. Secondly, RCG mentioned in her opening remarks that the 35 crore capex for the land is the work has started, and also mentioned about the product category. Just wanted to dive a little deeper into what kind of products is this? Are we getting contracted volumes, POs already from our customers? Is this some sort of business that is an existing business with a higher volume, or is it a new business, new wallet share? If you can just give some color there.
Okay. So as as we have been informing all our investors always, our model and our business is more on a fungible capacity, and the specialty chemicals which we produce for textiles, for cleaning, hygiene, FMCG, and oil drilling, oil field production specialties are being produced in the similar setup, and these are fungible. So whatever capacities we are adding upon can be used for either of the verticals where we already present about. This facility is an add-on reasons to have a better kind of technology which we have seen, which you might have also seen in the Ambernath first plant, which is already there for the last 2-3 years. Along with that, I would like to mention the Ambernath plant we have started the last 3 years back. We're already using almost 75% of it today. As you can see, the volume growth and it's already 25%, and the overall capacity utilization is almost 72% as of now, as of quarter four. So there was definitely a need of expansion, and any chemical expansion in India, there are a lot of rules and regulations and systems and processes and approvals. So basically, we are not looking at, everything takes time. So we are looking at already at 2026 times, what are we planning for. So this investment has been done for increasing our volumes and also catering to all the three streams, the three main verticals which we are catering to, which is fungible. So we are always being able to grab the opportunities wherever it comes from.
So I understand that it's fungible. I'm just trying to understand whether this is existing product which is leading to higher capacity expansion, or is this some sort of new product grade, new categories?
So as such, the businesses where we are, it's quite dynamic, and there is always new things coming up, new trends coming up, and there are a lot of more products to be added upon. At the same time, there is also the demands are going up, and we will require to produce more products, more quantities of the products which we are producing right now as well. At the same time, as you can see that India is going to become one of the very important specialty chemical hubs in the world. Most of the companies in the West are already eyeing at India for joint venture partnership and things like that. We want to be quite ahead of, like always, we want to be quite ahead in that, and in order to have those kinds of opportunities coming to us more rapidly, we need to be ready with our structures and infrastructure. And this is exactly what we have been going forward for. So it will be dual. It will be for new products as well as the existing product lines what we have been doing.
So this 35 crore capex is just for the land, or it includes some building utility blocks or anything like that?
So basically, this is for the fixed assets and for the land and building only. But of course, the plant and machinery and the permissions and the other things are separate and will be on top of it.
What will be the total capex for the plant?
Until now, we have planned for almost, let's say, 50 crores in that. Out of the 35 would be for the first phase. Let's just put it like this.
I couldn't really catch the number. Can you call again?
It's 50 crores all together. So 35 is already deployed for the land and building.
Okay, understood. My other question is, if I just have
Anupam sir, before you go ahead with your question, may I request that you use your handset, sir? There's slight disturbance coming from your line.
Yeah, just a second. Am I audible now?
Yes, sir. Please go ahead.
Yeah. My question on other expenses this quarter has jumped from about 12 crores to 14 crores. It has been the highest in the last 7, 8 quarters. What is the reason behind that?
So as such, generally quarter fours, you have a lot of new additional expenses in general as we speak. However, going forward, we have been doing a lot of sales promotional expenses. We have been exhibiting. In fact, in the last 30 days, we have exhibited. If you have checked on LinkedIn also, on our post, you will be seeing us in Bangladesh, in China, in Frankfurt, in USA for the oil and gas show. And so there is a lot of traveling and exhibitions and things going on, and we are laying a lot of seeds and investments on those lines. This is part of this is already something which we had already planned for, and the results will generally be seen in the coming couple of years on those lines.
Sure. How much volume this new CapEx is going to add? You haven't given out that number yet. Any broad sense how much volume it's going to add on 104,000 ton capacity we have already?
Yeah. So basically, as of today, we have 104,000 tons, which was 3 years before it was like 43,000 tons broadly. And as we speak on quarter four, we have already touched annualized production capacity by almost like 72%. That's a 76,000 tons is almost being utilized as of now. And the optimum capacity utilization is not more than 80 or 85% broadly. So looking at that, we are already looking at least 20,000 tons expansion in the first phase, and the work is on for that.
In phase 1. And what will be the phase 2?
Well, another 20,000 tons, but yes, we generally go by phases only. And the phase 2, generally speaking, like also in the current capacity where we are today in Ambernath, the first phase takes a lot of time and cost inventory because setting up the infrastructure and things like that. The phase 2 doesn't require too much of a time, and it's not too expensive also from that part.
This phase 1, 20,000 tons going to get commissioned which quarter? To be precise?
We are trying to do it by the year end. Let's say we are positive at least by, let's say, the financial year end. Surely we should be up.
Mr. Anupam, does that answer your question?
I couldn't really catch. There was a breakage. If you can repeat, Sanjay sir.
Okay. I just mentioned that it will be at the end of the financial year. We can expect, but we'll keep informing the investors by the stock exchange as usual about the developments going forward.
Understood. Last question from my end. Can you give the update on the fundraise?
Yes, as you might have also knowing about that we are, let's say we had an inorganic acquisitions after the IPO 10, 13 years back, and this was the first international maiden acquisition we had. The synergy has helped us a lot in Malaysia, and as such we have been always cash rich as such, and we keep looking at a lot of opportunities, making sense for synergies, similar chemistry, similar markets. So as we have got across certain company, and we are working on the process for the same. On the fundraise of it, we have already got the confirmations and funds for the first fundraise, which is of 120 crores broadly. Out of that, already 55 crores has been raised. Also from the promoters' family as well. The stake has increased by 1.2% on that line. And so that's one part of it. And yes, in order to have, we have got a lot of demand from marquee investors right now, and we would like to bring them on board as well for the preferential. So we are discussing with them, and by the coming couple of days in the next board meeting on Saturday, we'll be able to have more insight on it.
This acquisition is going to be a domestic acquisition or an international acquisition?
It will be an international one. It's something which we are already working very closely on the product line synergies, and we are we are quite cash disciplined, as you can see on our ROC and RV. So we'll be looking at companies from that angle as well.
Understood. I'll get back in the queue if I have further questions.
Thank you so much. Thank you, Anupamji. Thank you.
Thank you. The next question is from the line of Karan Kamdar from DR Choksi Finserv Private Limited. Please go ahead.
Hello, sir. Hope I'm audible.
Yes, currently. Yes, sir.
Yes, sir. Congrats on a great set of numbers. What I wanted to know is, can you tell me about a little bit about volume growth by segments? How has the volume grown across the segments, all the three segments that we have?
So broadly, let's put it like that. There has been a 25% volume growth, totality mein. And I would like to strongly emphasize, which I have been talking about, that there has been good times for the textile industries already. And we have seen at least 20% growth in the quarter-on-quarter basis itself, in the textile itself. And it's still picking up. And let's say cleaning and hygiene, relatively, it's less than 5% growth if you compare quarter-on-quarter basis. But overall, we talk about this 25% growth.
Okay, got it. Sir, so the 25% is also YOY growth number also, right? YOY on a full year basis?
Yeah, exactly. Yes, it's YOY basis. Perfect.
On a full year basis, how is the cleaning and hygiene segment expanded?
Well, it has also seen a good growth. As such, if you want a number, it was, let's say it's 22%, 23%. Let's say, yeah, you can broadly convey 25% more or less, yeah.
Okay, got it, sir. Sir, my next question is on how do you see demand and price trends for us? Do you see realizations dropping here from here on further? Because our volumes are growing and I think the growth will come from realizations. Where do you see the trends going forward?
I would like to mention we are a solution chemical provider. Okay, so for us, turnover is one part of the story, but what's our core focus is on the EBITDA margins and EBITDA absolute number growth, and that's what our company is focused upon. And there has been a lot of changes in the trends of the textiles, so there is a lot of modification in the textile chemicals offering. Product mix is changing, which is also helping us as such. So not only our EBITDA margins are getting healthier, but our EBITDA absolute numbers are also getting better. Yes, as such, as you have seen, this last financial year was a remarkably price correction year for the chemical industries broadly, whether it's agrochemicals or industrial chemicals or whatever we can talk about. In spite of that, I think our team has done a superb job of having a better EBITDA growth on that lines. What I can see is, as you must also be knowing about, in the last 2 weeks, there has been big changes happening in the freight cost, containers not getting available, geopolitical situation changing up, and freight prices going up rapidly, and again, shortages are being created. I wouldn't say that, the times of 2021 of shortages to that level will go, but you never know. So the average realization price has to go higher. That's for sure. From this, I would say from the current month. So let's say from the month April or May month or something like that. Eventually you will see, not only I'm talking about our industry, I'm talking in the chemical industry at large. So this is the place what we are looking at right now.
Got it, sir. Sir, one last question on our cleaning and hygiene segment. I understand some part of it is B2C and some part of it is B2B. So can we get a split or some color on that segment?
It's very tough to give it, but broadly, let me tell you about our model again. So basically, we are not into the retail segments. We are not in the retail segments because the cost, that's not our forte area. Our forte areas is institutionals and B2B businesses. And our plants are like, FDA certified, and we have all the licenses to do all these product production. As such, our majors will always be the B2B businesses. Like that.
Got it, sir.
Yeah.
Thank you. Thank you so much, sir.
Thank you.
Thank you. The next question is from the line of Kush Tandon from Ananta Capital. Please go ahead.
Hi, Sanjay ji. Congratulations on a consistent quarter again. It's commendable to see last 12 quarters of consistent cash flows, EBITDA growth, profit growth, and good ROCs and ROEs. Just wanted to understand, I think textile has grown quite well last year for us. Do you see the same trend going ahead this year in textile, especially when last 1.5 years were tough for the textile sector as a whole?
Thanks, Krushi. Yes, coming to your answer, yes, definitely. So I can also put it in a way that in the last 1.5 year, the textile was not growing at large. However, our company has been growing the businesses on textile chemicals, offering more product lines, getting more geographies, participating in most of the exhibitions and things like that. But in the last one quarter, and even in the current quarters and going forward, I think the times for textile is coming back. And if this thing really happens, I think the better days for us for textile specialty chemicals is around the corner now. So we are very positive and excited with the opportunities coming in. At the same time, there is a great requirement coming up for technical textiles. As you know, the government of India has also been promoting the technical textile aspects. And I would like to mention all participants that the technical aspects of the textiles cannot be done mechanically. It has to be done chemically. And that means there is more usage and consumption of our specialty chemicals. And not only that, apart from this being very expensive per kilo, average realization price, and also this is a very sticky business. And Biotex Malaysia, which is our international arm and also developing and leading the R&D developments, is pioneer in developing such product lines, and they are already too much into the textile finishing and technical textile offerings. So this is something which we are quite excited about as of now.
Okay. And the other question is on the FMCG detergent business. Sir, I know there is one big customer of ours, and sir, has the product been consistently delivered to this one customer? And we were also attempting to get some other multinational customers also in this detergent business. Where are we on that journey?
So nice question, actually. So let me tell you, we have expanded too many more product lines on this in this segment. Let me touch upon this question first, and then I'll give you an overview what's happening in this business also. Let's put it in a way, yes, we are already getting into many more customers, and some of the customers we are doing some joint developments on a NDA basis, which I would not be able to name right now, international big ones. At the same time, there is a great demand coming up for products which are coming out from India, and we have been well accepted by most of the biggest companies. Even Patanjali is our customers for almost a couple of years. We have increased many more products and solutions. Now, let me tell you what's happening in detergents and cleaning hygiene business and where we are. So basically, most of these FMCG companies, we are supplying our specialty products in to them, which is as a raw material, doing a performance to make and enhance the performance of their detergents and cleaning products. Now, our products is a small cost for them, and this is going to the entire masses and retail businesses. In textile, in detergents, the cleaning and hygiene, this business is almost $50 billion globally. Okay. And there is a big demand coming up for sustainability going forward. I mean, all the industries are doing it. In textiles, let me put it like that. In the last 4 years, the sustainability is the main key area which has driven our businesses. What I mean by sustainability in textiles is we have reduced the TOD, TDS, BOD, COD, water consumption, power consumption, and reduced the timing used by the customers, and then promoted our products. And this is something which we are an early movers in sustainability from 2011. However, that time it was too early, and the textile was not able to digest this sustainability drive. If you look at current point, or most of the textile corporate companies are always talking about sustainability. And now, coming to detergents, this is something which is coming up now. Let's believe 10% of this market gets sustainable in the next 10 years. So we are talking of 10% of $50 billion market means $5 billion market per year. If this gets sustainable, and who are the takers for this actually? And so basically, it's getting mandatory by, I read certain articles, and we take participations and a part of conferences in most of the Indian soaps and detergents associations, where we understand that the foreign multinationals, they have already laid norms that from 2026-27, we have to restrict or stop using crude oil-based, fossil fuel-based derivatives in detergents, which is LAPSA, acid slurry. Soda ash also to be reduced because the carbon footprints is getting also affected by that. So it's easy to say to replace, but then you need something to perform and clean the clothes in the washing machines, and then we come in between. So we have the solutions, and we're already selling it very well, and the demand for this is increasing and growing. So there are certain statements made by Procter & Gamble and other big companies like this that they will stop using these fossil fuel-based product line in detergents. And we are the early movers in that. And I think if these things happen, there's a whole lot of new business which will be coming to us. Apart from this, we have increased many more product offerings to this sector where we are able to we are able to give them certain product performance in the liquids. It can get better performance, stability-wise, getting it more thicker. There are many, many more additive products which we have been supplying to this cleaning and hygiene sectors. So we are looking, and we are quite early in this. We have big names already in our customer profile. I think we are also excited on this line at the moment. So this is the way the cleaning hygiene sector will be shaping up in future.
Okay, thank you for that. Also, one question on the raw material pricing, which had seen a downward trajectory in the last 1.5 years, and where our realizations may have also come down, but the fall in raw material is more than the fall in the realization, so the margin in percentage terms has gone up. What are the trends that are happening in the raw material space, Sanjay ji, right now?
So yes, as you rightly said, there has been offshoot already there effectively in the raw material pricing. Everything is going up. So generally, so in textiles, we do not have long-term annual contracts with the customers. We have contracts, purchase orders are generally given for 2 months period and dispatches or intimation. So whenever there is certain kind of price increase, which is we are facing now, and so we always pass it on to the customers, and we give them a 1 month or 45 days window in which we can always align our pricing and things like that. And then we can take it up to that level. So yes, this happens all the time. But generally speaking, there is never, I can say, if you ask about the frequency in the last 10 years, the number of price increases are definitely much, much more than the number of price decrease. So I think price increase is always good for the long-term perspective of the company.
Okay. So my final question is on the fundraise and the inorganic acquisition that we may look at. So any timelines on that acquisition? Let's say this fundraise closes, there is a board meeting that you called for again. So any timelines that you can give us an indication by when can you conclude an acquisition, in the next quarter or any such guidance?
So as already been mentioned on the stock exchange, we are in the process of diligence and on advanced stages of discussions. As you know, these things do take time, and we are already, I can say, we are quite excited with the opportunity. And as soon as we have some updates, we will be informing all the investors and participants via the stock exchange on that line. And yeah.
Okay.
So we are also, as you also mentioned, we have a board meeting on Saturday. Yes, day after tomorrow, we will be having to board on certain more investors, probably. And we are looking at on those lines on Saturday.
So Sanjay ji, all the best. Wish you the very best for the future.
Thank you, Mr. Kush. Thank you, Ji. Thank you very much.
Thank you. The next question is from the line of Nalin Shah from NVS Brokerage Private Limited. Please go ahead.
Congratulations, Sanjay ji and the team, for an excellent performance which you have turned out for the March 24th. Sanjay ji, my question is very little broad. You have described, I think, major items of your growth and, strategy for organic, inorganic growth. When I analyze your company, I find that in last 5 years, astonishing performance. From 2020, you had about 14 crore PAT, if I am right. It has grown to now 121 in 5 years' time. And so is the top line has also grown. So if I see that, almost about from 2020 till now in 5 years, your PAT has grown by almost 800%, 8 times or so. My question is that with whatever you have described in terms of, your organic, inorganic strategy, can we expect a similar strategy of growth for the next 5 years and say that within 5 years, we will be somewhere at around, say, 2,000, 2,500 crores in top line and some 500-600 crores on PAT? Just general indication of your strategy.
As you have rightly gone through the numbers, you are very right in your figures, and this has been the performance by the team and the company as which you have mentioned. I would like to mention that we are quite confident on accelerated growth in the next 3 to 5 years. And coming to one more point is, as you can also notice, that we also focus on our efficient capital deployment.
Correct.
And this has been the DNA of our story since. So basically, we are listed for last 52 quarters by now.
Correct.
From 2001 March. I think 54 quarters by now. And if you can check any of our quarter, you will see our EBITDA margins has never dropped by 17%. Okay.
Correct.
I only would like all the participants to keep this noted, because this is in true sense, we believe that any specialty chemical company, by virtue of the definition, it means that there has to be a baseline of EBITDA margins, and that's what we have been doing.
Correct.
From 17% to, let's say, up to 29-30% also sometimes.
Yes.
So I think in true sense, this is the true specialty chemical business where we are. We want to remain like this. So let me also put it like this. This is all done organically, number one.
Correct.
Now, there have been times where a lot of nice companies and their shareholders who like us to be on the top of their company and run it and drive it in a more efficient way, so that,
correct,
they also understand the, let's say, the passion our team has for excelling in our businesses.
Correct.
So, and we are very, let's say, disciplined in cash deployment. So we will like to go for inorganic opportunities, which is definitely in line with the product businesses which we are doing chemistry-wise or the markets. And we got certain nice opportunities which is making us excited. So let me also put and come to your question that I would not say by number, I don't want to give a commitment on the number, but I can say what we have done in the last 4 or 5 years in terms of percentage can be surely done in the next 4 or 5 years. So without giving any forward-looking statements on that line, I can say that the times are right. And if our team can perform in the ups and downs in the last 4 years, let me put it like this. The world has seen all the ups and downs, everything in the chemical industry we have seen. Okay, there were quarters where there were no businesses, and there were certain quarters there was no raw materials, there is no freight, there is no shipments, and China stories and all the, so everything, and then again there is a drop in the raw material price. So every cycle our company has sailed through. I cannot imagine anything more happening to this world, because everything what could have happened externally has already been passed through by us and by all. And I think now is the right time for all the investors and participants to understand that what is commodity chemicals and specialty chemicals. And so, I think we are in the right spot, and I don't see any reason why things cannot happen in the next 3-4 years, as you have mentioned about.
Thank you, Sir Jabas. We wanted only to have a distinct idea that the 5 years what you have already achieved, similar kind of journey going forward next 4 or 5 years, one can estimate. Ups and downs is the part of the business, but yes, the journey is towards that, and you are also envisaging the same kind of a journey for the next 5 years now.
Surely, we are already on the mark of it, and this is something we would rather be very happy to do it as soon as possible.
Yeah, my best wishes. Thank you very much. Thank you.
Thank you, sir. Thank you very much.
Thank you. Ladies and gentlemen, a reminder to all participants, you may press star and 1 to ask a question. The next question is from the line of Smita Mohta from Credent Info Edge. Please go ahead.
Yeah, hello. Are you able to hear me?
Yes, ma'am. May I request that you use your handset, please, ma'am?
Yeah. So, basically, I wanted to know, sir, earlier also I had asked on your portal, the Ambernath facility that we had done, specifically we had done it for import substitute chemicals in the specialty chemical segment, right? So now I would like to ask the management in the same that the Ambernath facility chemicals that we are doing right now, what makes it, us the main people for this kind of chemical, and going forward under the textile segment and cleaning and hygiene segment, in this import substitute chemical space, where do you see yourself going forward, as you were talking about organic and inorganic acquisition?
See, I would like to mention that there is a big heads up going on in the specialty chemical sector especially in India, okay, in the last few years. So our business is not only as an import substitution, but it's also, we are determined to also do a lot of exports from India, and that's what we have been doing. Let's put it in a way that we have been able to grow our product lines for textile specialties, for oil drillings, for FMCG areas, and these are fungible capacities. We are geared up to take most of the opportunity which comes in our way. And so this organic expansion which we have been doing is based for all the industries. It's not only for a particular one and not only for import substitution. But yes, till now what was happening, the competition we had in FMCG was by BASF and Dow. I mean, these are two main global world leaders. And ironically, they do not have their plant in India, and most of the goods coming for the cleaning hygiene FMCG is either in Belgium or from Indonesia or certain different countries. And so that has also helped us a lot to make in India, and with the new concept of the government and the pricing, which is available, the raw material availability indigenously is also helping us to have a better edge and become more sustainable. Because now we are supplying to our customers in tanker loads without the drums. And whereas if you have to import from BASF or Dow Corning, you have to wait for 3 months and get the goods in drums, which most of the detergent companies are not happy about. So yes, that gives us an edge to produce in India and grow in India as such. I hope this answers your question actually. Over to you, Zico, please.
Yes, sir.
Hello?
Yes.
I'm audible? Yeah.
Yes,
please.
sir.
Yeah.
Ms. Smita, please go ahead. I think Ms. Smita has dropped from the queue, sir. Maybe move to the next question. The next question is from the line of Anirudh Baga from AV Securities. Please go ahead.
Hello.
Yes, sir. Please go ahead, sir.
Yeah. Sanjay sir, so congratulations. It's absolutely commendable with what you're doing with the company. Congratulations again. So I have two questions. One is regarding the fundraise. So sir, is it a conscious decision on the part of the management not to take on debt because we've already been a zero debt company? Or are you planning to take on debt with equity dilution? That's my first question.
So should I answer this question first, or you want to continue?
Yeah. No. I'll just bring my second question. Yeah.
Okay. So basically, as you can see, we are already quite growing company, and we have this organic expansion which we are already doing. At the same time, there has been a good dividend also which has been done in this year, almost let's say about 17 crores or 18 crores together for this financial year. I would like to mention we are not skeptical about taking debt or anything like that, and that's something which we are always open for. That's not the point. And even in this, we already factored that component also. So yeah, so maybe in the coming times we'll be much clear in the coming next few months or few fortnight. Maybe we'll be able to decide on the final strategy on how much component of the debt we will be taking and how much equity.
Okay, understood, sir. And sir, just
would like to touch on that part that the promoters have also participated in the last preference, and we have increased 1.1% in the total equity of the company increase the stake by that, yeah.
And so my second question is the land that we've acquired at Ambernath. So we've got the calculations in terms of the amount that the land is worth and everything else. So what does it transpire into the tonnage once the land is fully utilized?
This is a big space, and we can always, in our business, it's a very fungible capacity, as well as we can always increase the capacities on staggering basis. So it's not the way that, we have to put all the money first inside and then only the production will happen. So the ideal way for us is to have certain quantity production first and then have room for increasing phase-wise. That's what we had done even in the current Ambernath plant, which we started 2-3 years back. So we'll keep doing on the same strategy.
Okay. And so one final question, the container costs, which you mentioned, it's gone through the roof. Anybody who's tracking the market would know that the container costs have gone through. So is it going to actually impact the bottom line as such in a major way?
Well, we are working on a gross margins of almost 39-40%, and this is not of one quarter. This is the average for last, I think, at least 6, 7, 8 quarters. So let's put it in a way that these things, we have enough of reserves and room to always face these challenges, number one. Number two, as you can see our model, we are more on let me put an analogy that we are a fine dining restaurant, okay? And so basically, even if the price of the basic potatoes and onions goes a little bit up, we don't need to rush around and, we'll be we'll get into the loss territory. Nothing happens like that. On the contrary, these are the ways when we revise the prices with our customers and when the prices of the freight gets normal and things, and that time we don't need to go and revise downwards. So then you get a better jump on that price. So, this is the model where we are.
So from what I understand is, बहुत ज़्यादा major impact नहीं है. It's going to be neutral as such.
This is on and off. I mean, this is nothing new. So we do not need to worry on these things. Like I said now, in the last 4 years, the entire world, especially the chemical world, has seen the unbelievable downs and ups and then again the correction. So if we are still able to do what we are doing, I think the result speaks for itself. I mean, I didn't need to mention too much on this, but yeah, if we have sailed through till now very well, I think our team will be doing much better than where we are today.
Okay, that's all for me. Thank you so much, Sanjay sir. Wishing you all the best.
Thank you very much. Over to you, Zico.
Thank you. Ladies and gentlemen, that was the last question for the day. I would now like to hand the conference over to Mr. Sanjay for closing comments.
Thank you, everyone, for hearing us out. We are very accessible. If you need any more information, you can contact our investor relations. It's already there in the invitations and our earnings presentation details. We are here and we are open and we are very excited for the coming opportunities. We'll keep updating everyone through the stock exchange medium and we'll keep doing our best. Thank you very much. Have a lovely week ahead. Thank you.
Thank you. On behalf of Fineotex Chemicals Limited, that concludes this conference. Thank you for joining us and you may now disconnect your lines.